Okay, MegaWhale chain, welcome back to another video. Today's video is going to be a quick Bitcoin update. We're going to keep it short and sharp and get straight into it. Before we get started, if you like our videos, remember follow, like, comment, and subscribe. If you have any questions, leave them down in the comments below, and you can join our Twitter and our Telegram in the link in the description. And if you want to join our VIP channel, you can join our VIP channel by contacting me through Telegram. That being said, we'll get stuck into it, and today's video is going to be a little bit messy. There's a lot of lines going on here, a lot of stuff happening on the chart. I'm going to try my best to break it down to you guys as simply as possible. First and foremost, if we zoom out on the 1 hour chart, actually we're going to go 4 hours. We do have these two lines, and you can see there's ascending trend lines here. And I'll quickly circle these so you can see we have these two lines, and they kind of cross over at this intersection point, all right? And they both provide a little bit of short-term support to Bitcoin. We can see this trend line originates here, crosses through, finds support twice over here. This trend line originates over here, crosses through, finds support a lot more times throughout the entirety of this short-term trend. And of course, all of this is happening within a macro descending wedge. And we have our upper bands of resistance, which is this trend line here, our middle band of resistance, which is our higher descending channel resistance, and our lower band resistance, which is our lower descending channel resistance. Keep in mind, a lot is happening. The chart is very complicated. When prices push sideways like this and they go choppy, the charting gets quite complicated. But it doesn't need to be complicated. We're going to try to explain this very, very simply. Essentially, what we've talked about in our previous videos is for us to be bullish again, or for us to get some sort of bullish momentum going, we need to flip and remain above not only this trend line here, which is that 39,225 trend line, but we need to get back above this major descending resistance. When we clear this whole resistance zone, and I'm going to point it out to you guys, this zone here is a resistance zone. This whole entire area is resistance. All right, if we flip that area, we now have this whole entire area acting as support. All right, that's pretty huge. All right, we flip a major resistance zone, we turn that major resistance zone into a major support zone. If we flip that, there's a good chance we can come upwards and push into this next resistance block at $45,500 to $48,000. Of course, there's a lot on the line right now. Obviously, interest rates hiking, Ukraine situation, inflation going through the roof. There's a lot of stuff happening that's impacting global financial markets and inadvertently impacting Bitcoin as well. So we have to be cautious. We have to, I would say, be optimistic but cautious. So cautiously optimistic. And I think that's a perfect way to put how I'm taking it, how I'm viewing the market right now. It's cautiously optimistic. I'm not allowing FOMO to take control. I don't care if I see green candles like this. I don't care. I participate, but I'm definitely not putting a lot of money in. And vice versa, I don't care if we see red candles like this. Again, I'm just taking my small scalps and exiting the market. But, there's a big but, we do need to be prepared for both the best and worst case scenario, because the best and worst case scenario now is they're both quite considerable. Obviously, worst case scenario right now is we lose these trend lines, we head on back down into this range here. Now, it's a big range, guys, $30,000 to $35,000. That's a pretty massive drop. And if that happens, a lot of altcoins will get absolutely wrecked. If we take up any altcoin right now, let's take a look at Gala, for example, and we go to that daily. Gala is respecting a long-term trend line right now. If Gala crashes any more than it is now, all right, it will crash massively down. And that will be triggered by Bitcoin collapsing into this support zone. So the market is in a very fragile position right now. And this is where you should not only be managing your risk, but being aware of the pros and the cons of investing. And of course, the risks on both sides. There's upward and there's downward risk. So with that all being said, I know there's a lot of spill, a lot of words before we get started on the video. We're going to take a look at the video. We're going to take a look at the chart. We're going to try and analyze where we think the price is going. And of course, just to zone out the bearish scenario, if we fail to close a daily candle above this trend line and above these two red lines, we expect a crash down. All right, simple as that. If we can't get a daily close above these two red lines and this upper trend line, we expect a crash downwards to $35,000. I think it's inevitable at that point. I think it's going to happen. I think it's just dragged out and it's taking its time. Now, that's our bearish scenario for the short term, of course. For the bullish scenario, if we get that close above these two red lines, there's a good chance we can push and retest this resistance zone again. And if we get another chance to retest that resistance zone for the third time, I do believe there's a good chance we can push through this resistance zone and even potentially flip this $42,000 resistance and push even higher. And the reason I say that is because if we take a look at the inverted chart, and I don't currently have the inverted chart up, but a descending channel is a similar chart to an ascending wedge. And I covered this in a previous video, but if we take a look at a descending channel, we have the price enter, breaks down, finds a bottom, kind of plateaus and pushes upwards. If we invert that, what do we see? Well, we see an ascending channel. All right, the price enters, all right, it pushes upwards until we lose momentum, we start plateauing, and then we break downwards. All right, so what we're seeing here is a similar thing. All right, we can invert this and we can see that eventually this will break upwards. And we've said it many times, eventually this will break upwards, eventually this will break upwards, but it really will eventually break upwards. The problem is we have a lot of dynamic resistance between where the current price is and where the price will need to actually get back to for us to be bullish again. That is the whole problem with this chart, is we have too many resistance zones and we have too much resistance above us, and it's going to be very, very difficult, even if we do break out of this pattern, to flip those levels and turn bullish again. And I don't care what other people on Twitter are saying or what other crypto influencers on YouTube saying we're going straight to $100,000, blah, 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 blah. It's all irrelevant bullcrap, really. The reality is, until we start flipping these resistances, these short-term price fluctuations don't mean anything. All right, this doesn't mean anything. This doesn't mean anything. It does not mean anything. In my eyes, it might as well as just gone sideways the entire time. That's basically what is happening. And we are consolidating and we are losing this selling pressure, which is good to see. But obviously, if there's interest rates hiking in the next few days, it could definitely take Bitcoin and shake it on its head. Even if it's looking good now, and even if it's looking good in a daytime, you know, when its daily candle closes and a daily candle closes well, it could completely flip it on its head and crash it. You look what happened when the interest rate hike was announced. Look at this 12-hour candle, guys. Look at this. 10%, 9% down. All right, guys, so we have to be careful, we have to be optimistic, but we also have to be cautious and, you know, screwed on, and we have to be aware of both potential scenarios. So, longer video today, guys, but we'll get straight into the technicals now. So obviously bringing up some of the technicals, and what we'll do, we'll just delete everything on the chart to bring up these technicals. We're going to bring up our moving averages and our RSI, so I'm active RSI, and we can see that we do have a little bit of convergence upwards here. Nothing too considerable, and obviously the RSI is moving upwards. We have a bullish engulfing candle over here. On the one-day chart, same kind of thing, it's kind of replicating that, and obviously if we move down to the 7-day chart, we can see that the selling pressure has definitely stalled. It is definitely slowing down. We have these huge wicks, but very small body closes. All right, that means the selling pressure is stabilizing. The buying and the selling is neutralizing. All right, what does that mean? Well, it means we are getting ready for the next move. And the next move could be a very explosive bullish move, of course, or it could be a very explosive bearish move. And it's way too soon to tell where it's going to go. All right, guys, we've given you predictions, we've given you targets, and we've told you basically what to look out for. And I guess in these scenarios, when you have external factors that could influence the price, the best decision to do is to wait on the sideline and react after the fact. Don't try catch it. Don't try predict what's going to happen and put your money in and just gamble it away. You may as well flip a coin at that point. Wait and then act based on what happens, and then you can make your decisions.